Oil prices jumped early on Tuesday, with Brent back above the $40 a barrel mark, supported by a rally in financial markets and a weaker US dollar on election day. The jump has borne all the hallmarks of a massive, logical and even inevitable short covering prior to the US presidential elections. According to the analysts, Tuesday's oil rally is exclusively due to the US election, not a recovery from the slump in oil prices last week. The bearish factors for oil are still very much present, with Italy also tightening measures to curb the second coronavirus wave, but stopping short of a nationwide lockdown for now. The UK, Austria, and Belgium joined this weekend France and Germany in announcing second lockdowns amid surging coronavirus cases. The market fears that the return of the lockdowns will further delay the economic and oil demand recovery. In addition, Libyan crude oil production is estimated to have jumped to 800,000 barrels per day, rising by 100,000 barrels over the past few days and putting pressure on oil prices from the supply side. One bullish factor which continued to support the market on Tuesday is that Russia is reportedly considering the idea that OPEC Plus delay the easing of the production cuts. The top executives of Russia's oil companies discussed on Monday the future of the OPEC Plus deal with Russian Energy Minister Alexander Novak, including an option to extend the cuts as is for 3 months until March 2021, instead of easing the cuts from January as planned, sources with knowledge of the matter told Russian news agency Interfax. The WTI crude oil market has rallied a bit during the trading session on Tuesday, as traders are still in the idea of some type of quick election result. At this point, the reality is that the market is still going to struggle with the idea of a lack of demand, and quite frankly the stimulus will not be much of a help either. How I know this? The last 3 stimulus packages did not help. Demand for crude oil is weak for a reason, and with economies around the world locking themselves down, it is foolish to think that that's suddenly going to pick up. I do believe in fading this market near the 50-day exponential moving average, perhaps the $40 level.